Good afternoon, Scott TV Live. Welcome to Thursday's recap. So, the Bears had their chance again, and what did they do? If I had a ball in my hand, on the floor. Second time that they could have had some follow through to some type of outside day, some more of a retracement to a technical sell signal. And both times, we started weaker, and then there was just no selling pressure. Then the go-to stocks go higher, market retraces, we come up back through the prior low, and the pattern continues to build. So with all that being said, let's just go right to the chart of the SPX. You look here at the SPX and you'll see this intermediate trend line and this accelerated one. We started the year all choppy and boom, broke the accelerated, broke the intermediate, hit the 150-day and bungee cord right back up. So on that way back up, okay, a few things to navigate. This was your red dog reversal right here. Here was your penetration, okay, right there. And then this is when it looked like it could have paused in front of old, just say support that turns into resistance. So with that being said, let's push this over here. So this way you could see what it looked like before it happened, okay? Here is where you cover some shorts. In here you have some longs perhaps. Then into that, why not reduce some risk into what could have been resistance for a retracement lower. I know this day I was pretty net short, came in, futures were down, and what do? We tested the 50-day and reversed. I remember covering a little bit and then, pushing on the rest, and that's how we closed. And then I said, you know what, I'm not getting short again right here. We're strong, same way we held right there. Then what happened? Another day up into the prior congestion. Then what happened? A little inside day, giving the bulls some confidence, and then boom. An outside day yesterday, an outside day where if you were long, and I was long quite amount, decent sized amount of positions, as we took back this area, that's when you get back into your longs. And I got out. Said, okay, I'm going to be net short overnight, which I was. Covered some, tweeted about it. Pre-market spies were down 50 cents or so. Then what happened? Boom. Another small red dog reversal. This time we held the 8-day, didn't get down to the 50-day, showing strength. Went back above 1826 and closed strong. So that's where we are. So if you're tactically navigating, here we are, a stone throw away from the prior highs here. So this is going to be interesting to see what happens if we break above it. You look at the Qs, and you'll see the Qs, came back, didn't even retest this prior high, held above the 8-day, bull flag. That can continue. Even I think the XLF finally had a little bit of a wake-up day. I guess nothing so, crazy to the upside, but a little red dog reversal. If you were short the banks, made a low, came back above it. Still has a lot to prove as it's halfway into this prior red bar. So this red dog reversal still controls the banks, and after breaking this ascending channel. But, some things bounced a little bit there. Bank of America got back involved today. I still don't think it's anything to write home about. It is holding this area, but I want to start seeing some power. This is this upper area. I guess it's happened many times before waking up. Not sure what it's going to take this time, but if the banks wake up, look how long this consolidation took after a big move from 10-11. So right now this is taking its sweet time. I guess you have one level if it were to get above 1645, and then you have this, and then if this starts to go, market's going to stream, and then the Bears aren't going to have a leg to stand on. And listen, everyone's like, why do you hate the Bears? I don't hate the Bears. I just think overall, over time, stock markets do go up. If you're a macro investor, you know what? You lived through 1987, 2001, the financial crisis. If you sold well and you timed it, you better have gotten back in. So overall, even if we do get some kind of big correction, over time, historically, they tend to go back up. If you trade intermediate trends, which I do, I tried being short twice. And the sellers had nothing. The Bears had nothing. So I went back to doing what I like to do, hold multiple positions, try and use a tier system. So when they're incubating, you're long, and when they break out, you could add, and then on the way up, you trim and trail. So with that being said, there were a few news pieces this morning, Facebook being one. They talked about it till it was blue in the face, about every reason why they paid too much for what's up. Shareholders didn't care. You look at Facebook. What did it do? It engulfed, okay, this move lower. So at first, the sellers came in, everyone got scared because I think everyone in the media pretty much made it as if this was the top, that's the top, because the same thing happened when AOL bought Time Warner, the same thing happened with, I heard of even references to CMGI, the internet incubator, but the stock said no. Okay, stock actually held the 8-day, did a red dog reversal, screamed higher, and still is in this trend. Yes, it got a little wishy-washy. So technically, yeah, you know what? Maybe it could have closed here on the lows. Maybe it could have tested the 21-day. But you know what? It held, reversed. So that was a nice trade. If you took, if you've been holding Facebook all the way back from, your little weekly cup and handle pattern, and you're like, I want to be in Facebook for the next 4 years or 5 years or whatever your time horizon is, you know what? You stayed in it and you have a huge winner. This stock's only been public for what? Almost 2 years, and you've already had, even if you got involved in the mess right there, you're almost at a not a double, but if you accumulated it in this cup and handle pattern, you did quite well. And if you waited till they finally reported that they could monetize search and waited for the gap up, like you saw in this daily chart, and you used some of your swing trading tactics, watching how a gap can give you power for an extended move, there you go. We'll see what happens tomorrow. Tesla was also in the news. It was a bit of a crowded trade. Look at, if you're a long-term investor in Tesla, good job. You found an innovative company. You found a CEO like Elon Musk who's been unbelievable, and there you are. Today, not much traction. What did it do? It opened up, and it still held above the prior high. So now, with some time, see if it could continue to hold 206 and perhaps go sideways before making another move. Not much to do today. I guess you could have been cute and shorted some on the open, or maybe even bought versus this, but really, it was just nuts and bolts back and forth type trading. Let this develop. As far as some other, just say social media real quick. Twitter, not much to say there. Held yesterday's low. LinkedIn, after a 2-day dead cat bounce, came in a little bit. So see if it can continue to hold for a potential move higher. You go to Apple. Apple, to me, I thought would get some type of bounce on the 3rd day. And then at the end of the day, I bought a little bit. I know I said I got stopped out, and I did. I got stopped out at the low of the day, but I took a little bit. Okay, it did reverse into this, and we talked about it. I said, if I were you, I probably wouldn't be buying in 550, 555, maybe sell and trim. And now on 3 down days, I don't think this move is over. Can it come a little bit in more? Yeah, we've seen Apple be very tricky. Did you have your calculated buy here at the red dog reversal at 495? Yes. Did you have it when it actually held a gap, which it didn't do here and didn't do there, for continuation? Okay, so now we have yesterday's low, okay, 529. I guess that's it, to trade against. If we do a trade below there, then I guess we'll get stopped out, and then we'll figure out if we get a red dog reversal a little bit lower. But ultimately, still not so bad. Okay, if you use your Fibonacci retracements and you want to try and play ranges in this thing because it's hard to buy momentum, okay, it's right at the 0.382% retracement, which would be nice to hold. Now, if we held here and turned up, or just even held here and went a little sideways, perhaps next week we get going, perhaps we could see a move higher. If we start to break the 0.382% retracement and come into that 50% retracement, then the speed slows down, faith leaves again, and then it turns into a rangy, just B- trade. And if it comes below it, same thing. But if it holds here and turns up, it could stay on your radar. As far as other things, people were talking about W-Day. Nice chart coming near the highs. Held the 8-day, looks strong. Yelp tried today again and didn't really have the power, but still looks okay. Maybe soon. GMCR did go. Okay, we've been talking about GMCR, and really nice gap. Look at that, the same type of gap that had power and a few other charts that led to move higher. Held here. Trade as it went above this prior area. Then here was another one. Some guys on the virtual trader floor did pretty well. It's step cousin soda. Tried a few times, didn't really go. I guess give it a little bit more time, and maybe it can get above there. BlackBerry. I don't really love this name, but we did have, I remember here, we had some decent, was it right around here? I think it was, yeah, it was right around here. We had some decent, what's the word, results here, I guess, when we had this move back up, and I think I sold into that. So now it has been consolidating, building another area. They do have a big messaging business, a little different, obviously, but, controlled pullback. Look at this red dog reversal down here. That was, when it switched, here is when it got frisky, and then since then, big move, consolidating, really doesn't turn on unless it starts getting above I guess the first level would be 965 and then 10. So be in your anticipation stage. Don't be in tier 2, tier 3. Be in a tier 1. Wait. If it gets better, then you'll know, you'll watch the action, and you'll see it. As far as some other things out there, Triple D, wasn't it just yesterday that they pre-announced bad revenues? And, look what happens when you get a stock that trades into its gap. Okay, it shows that the bears don't have power, and then slowly trickled up, had a nice little bull flag, continued. SSYS also, they tried to leave it for dead. It too, got back all the moving averages, looks okay, looks like that can continue. After hours, Groupon was up a bit. See what happens there. See, I guess if it could hold above 1150, and then you have 1250. Zynga held in pretty well. Think about the move that it had. Another bull flag. Here's that gap that was pretty exciting. Here's when it traded above this area. Now it's creating another flag that perhaps could lead to that $6 level. You look at the weekly chart. This is what we've been thinking is exciting. Long, huge consolidation. I know that some people got trapped here, or when it broke here. If you're looking for treasures for trash trade, because this was probably in your trash bin if you bought it up there, it's looking good. There is some room to 6, and some people even think it could perhaps get to 8. Who knows? This would be big time resistance. This, to me, is a little bit more realistic. So maybe buy the dips and try and stay with some and don't overtrade it. The casinos in Fuego, MGM, oh my goodness. Boy, did I leave a lot of money on the table. I was all over these things way back when. This was a nice trade. Here you go. And now it's at highs. LVS turning the corner a little bit. Okay, again, there are times when it's calculated and times when it's just on the way. And, LVS has been, a really nice mover. We started trading this whole group way back when, and I've lost a little sight of it, unfortunately. But ever since it broke above this, 58, it's been on the move. And now it's flagging again. I guess if it gets above this little area, these highs here might not be a problem. I'm not really that active in them, but some guys on the virtual trade for like trading LVS, MGM, and Win. I got left in the dust. I traded the hard money. Look at this. Win actually looks pretty good again too, right here. But overall, we shall see. Hewlett-Packard, I don't know what it's exactly doing right now, but pretty set up, really nice move at the highs. I think the report looked somewhat solid. I don't know if they're going to price it in or if it can go. If it can go, maybe it'll help Microsoft also. That has a nice tight pattern. Look how it's perking up into resistance. Resistance is right here. If you look at the VTF, I did get involved in some today. High-level flag holding above the moving averages. Perhaps it trades above this area and makes a move back to highs here. Not a barn-burning trade, but if you're in multiple positions and you think the market's going to break out and want some exposure, this at least has a nice setup, so looks fine. And that's really it, guys. I see a lot of opinions out there in the market, more on the Twitter sphere versus the virtual trade floor. I love what we have here in the virtual trade floor because everyone throws out good ideas. No one really has opinions. People are looking for price action. They're looking for nice tight setups, and everyone is trying to add value. And we're doing it calculated. I'm not going to say anything about someone out there, but my rules with earnings. I rarely ever take stocks into earnings, either long or short. I use options because if you're dead wrong, you lose your premium. Okay, I doubt a lot of people out there. I don't know if someone would have shorted Twitter, or not Twitter, or Tesla on the close. Not many traders could take pain and start shorting at 210, 215, 222, whatever it is. More like they probably would be scrambling to cover with it 15, 20, 25 points against them. That's why, it is what it is. Make sure you know who you're following, how you're following, because, not everyone has the same risk. We've seen it before in a lot of different spots. For us, we like to kind of ride the trend, play areas of the range, look for the relative strength, look for stocks breaking out. If we're not in that type of market, be tactical. And at this point, we have a little bit of everything. You can make money short, you can make money long, you could hold some positions, you could have a long-term time frame, you could just create cash flow. For me, actually, I have 2 accounts right now besides the 401k, which is the longer term. And this year, my active account is doing better than my swing account because every time I've gotten the most bullish and had the most stocks in the swing account, I've had to deal with a 20 handle down open or a 15 handle down open, or every time it looks like we have an outside day and you get out and get short, it's been tricky. But in the active account, if you keep things relatively flat and you do the right trade in the swing account, you could take the pain of the swing account in the active account, and then if things go from red to green, you can make cash flow, or if things go from green to red, you can make cash flow. And if I were you and you have 2 accounts, that's just something that has been working so far for me, where I'm not having the same positions in both accounts to just, to psychologically not own as many shares in my head, but whatever. It just makes sense. So that's something that has been helping some of the guys, where treat each account separately if you could do it psychologically. Your swing account is for longer term trades, situations that you could hold for 3 days, a week, 2 months, or whatever. And active trades are for the active tight setup that expands on volume, that you can make money tactically, sometimes a day and a half, sometimes 2 minutes. So with that being said, it's Thursday. It's been another long week. The sun is shining. I think we're going to have a nice weekend here in the Northeast. Get outside, go for a run, climb a mountain, play with your kids. Hopefully you don't have to shovel your driveway, which we've been doing for 2 months, and just enjoy yourself. With that said, have a good night. Tomorrow is the relaxed morning call. It'll be Darcy. I might be trading from Short Hills. If so, I will have no microphone on the VTF. Bye-bye.